Yeah, hey, in God we trust.
Hey, in God we trust.
Hey, who got the faith?
Hey, you got the faith.
Yeah, I got the faith. Do you got the faith?
Yeah, I got the faith.
Yeah,
Yeah,
in God we trust.
hey, in God we trust.
Keep that faith in your head high. Yeah, hey, in God we trust. What do you think? Hey, yo, what's up with the static, one?
everybody, gonna get started in just a moment here. Just trying to test out a few things here on the back end. I had my computer update overnight and it kind of broke everything. So let me know if my voice is coming through clearly, as that's actually been the main issue getting started with this stream, I should say. So if you can hear me, go ahead and let me know in the chat, and then we'll get started in just a second. What's up, Jedi Leroy? Alright, you can hear me fine. Great. It's just a local issue then. I'll have to work that out after the stream. Let me just get my drink here and then I'll be right back and we'll get started. All right, let's get rid of the music here and we'll get started. Berlin, Germany. So where are you guys from? Berlin, Germany. Mr. No Name. Yes, you're from California. Hello. Yes, I do owe you lunch. I will make good on that, sir. All right, so let's kill the music. Clear my throat here for a moment, sorry. And we're going to roll right into this, as there is some interesting things going on. I'm going to let you guys know right up front, I will probably lose my voice a little bit. I do apologize ahead of time. And, nope. We're gonna do this the right way, because I may want to edit this down. So let me go over here. We will do this. Uh-oh, it's already starting. As soon as I go to start talking, let's go on the daily. And we're going to pull up a few other things here. Then we're going to get rolling right into this. I want to make sure that we have this for reference at least. And we'll go from here. We're going to look at open interest stuff. I'm going to explain a few things here in just a moment about open interest and the relationship with support and resistance, and generally how to read it. It's not going to be 100% ever. I don't trust OI readings or long-short ratios, but we can derive a few things along with our other technical analysis indicators here. Let's see. Let's get back to the live stream panel. Am I gonna do daily live streams? I might try to do some daily stuff, but it's probably just gonna be as I get time. I will set a schedule soon and try to do, at least twice a week, as I do find that many people do enjoy the live stream format. I've been getting a lot of requests to do it, but we're gonna get rolling here, and then I'll answer some questions in just a little bit, and we'll probably. So what I'm gonna do is take a look at Bitcoin, take a look at traditional markets, and then I'll take some requests for altcoins, and then there's a couple that I actually want to check in on as well. I'm trying to buy time to see if my voice will straighten out before I actually get rolling. So, but yeah, I will have a schedule out for live streams as well. I want to try to do like a Monday, Wednesday at least. Maybe a Monday, Wednesday, Friday. We'll see. Well, it can't just be Bitcoin every time, so we'll have to work through. I'll just discuss it with you guys in the community, Twitter, here, and other places, and I want to see what you guys prefer, what it is that you're looking at, and then we'll set something up to have a regular, regular shows, basically. All right, let me move over here. I got most of that settled. Then we're going to get rolling. Hello and welcome to Market Madness Technical Analysis Live here on Landy's Crypto Corner. I am your host, Landy, and we're going to take a look at Bitcoin to start out today. As Bitcoin is, still in the range. It really hasn't done much. I mean, just spiking the highs and the lows of the range here. We did see a little bit of a lower low in yesterday's closure at around that, what did it close at here? 29,861. So just a little bit lower than this order block candle over here on the daily on the way up. That has kind of defined the range. I mean, the wick low coming in at 29.5. It did get swung down there at 29.4. And we haven't really seen much. I mean, we're going now, how many days has this been? It feels like the eternal range. It has been almost a month, so 27 days in this range up here. And, this is kind of a very Bitcoin thing to do before, a real big move gets rolling. And I do suspect that this is kind of based on the 2-day look here. When looking at the 2-day, we have now gotten in and around that basis band in terms of price action. So the basis band has moved up on the 2-day here. It is kind of blocked by my little support zone down here. between the two licks. Yeah, between the two wicks even. Oh boy, this is gonna go great today, guys. The wick low at 29.5, which was a daily support level when looking back. This was a daily high that was put in May, early May. We wicked right into that close open structure, and then a swing of the low, move up, hold the range at the order block on the daily here, and then another move up, and now we're swinging those lows again. And we did close on a slight bit lower of a lower low here, but we're not seeing follow through. And that's where we have to then pay attention to some of the time frames below the daily and how they're going to interact with the daily. So last live stream, I had mentioned that somebody in the community had, a friend of mine in the community had found a Stoke indicator that gives you the pivots, that is a free indicator. I don't know how he managed to find this, because I searched for free ones for people for a long time and never found one. And I do have the paid one from app.chronotrading.net, the KVDB stochastic momentum indicator, or advanced stochastics. And I still use that one. Obviously, I support their work over there. They do a great job. But you can get this free momentum indicator, and this is something that I am going to keep a close eye on if Bitcoin is still hanging out in the range above that wick low at 29.4, as this reading is very close to KVDB's. They're using very similar methodologies to calculate, I suspect, as they're coming up with just about the same number, like within $1 of each other usually. And this free one is the BA reverse Stoke. And it's I believe that this is an indicator that was made from an on-chart indicator to put one on pane, if you read the description for this. But this is saying that the Stoke cross up, and that would be an initial cross up, would be at 30,625. So when looking at our bands here on the daily, we can see that the 30,600 area would be above the basis band here, which is coming in at 30,431. So realistically, if we do see things start to close back above the lower first standard deviation of the range here at $30,000, roughly $30,050, I do suspect this is going to come down a little bit if Bitcoin does close under it. We will still see expansion increase on BBWP. So the Bollinger Bands will continue to expand, but they're kind of drifting. And the lower second to third zone is holding up as a potential reversal area. Now, from the look of today's candle, the low would actually be set. You can take the wick high as it is right in line with the open from the 17th, which is Monday's candle. So yesterday's wick high to that open on the 17th, which is coming in at 30,000. We'll give it some room, 30,150. If we do see closures above there, that would set this in as a low. And in this case, I would be looking for things to trade back to the basis to upper first. And this has, been the same theme in the Bitcoin in 60 seconds videos for the past, I would say, what is this, 7 days or so, 5 days since Bitcoin got back below the basis band. So if Bitcoin does move up above the basis band and even get above the pivot for Stoke, Stoke is just close over close momentum, so it is indicating closes getting higher, increasing in this case in terms of their momentum. And this is still the bearish retest zone. 30,000 roughly, you could take 400 or 500 at the basis to the upper first standard deviation at 30,800. And that's because of, all of these wicks over here and closes from when Bitcoin originally got into this range around the 30,700 area with the wicks all coming in and running that 30,800 and getting pretty violently even rejected. So that is the bearish retest zone. If Bitcoin can push through there, it's It's not a given that the bulls are going to take it all the way, but I would be looking to the upper second standard deviation, which again, it's around the 31.1 to 2 area, to the upper third at around 31.5. And if Bitcoin can get above there, I would be looking at the overhead resistance. As I realized I turned away from the microphone, I hope you guys could hear me okay. And that overhead resistance is the daily, weekly, monthly area at 31.8 here. So just keep that in mind. Even if Bitcoin runs the top side again, it's got a lot of overhead resistance to get through. That's a very big area at that 31.8. But I would be looking for any kind of closures in the strong half of the bands. That's tough to say, honestly. Even in the Bitcoin in 60 seconds videos, by the way, I have to keep re-recording them because I'm like strong half, like which half. So then I got to go back and do it again, another take. But either way, Bitcoin in the strong half of the bands, meaning above the upper first, above the basis, obviously, but preferably above the upper first. I would be looking for general upside back to that area where the current wick high of the range is now at that overhead resistance at 31.8, and possibly a swing up to around that 32.4. When looking at this from the 2-day perspective, that's still, it's in a dicey area. It's the upper first, or in and around the upper first. So the upper second and third, let's go ahead and turn on JRTA's levels here so I can see both the 2-day and the daily bands. Let's go ahead and turn on the daily bands. I think this is on the 4-hour currently. Yep. All right, so we can see that the upper first standard deviation on the 2-day is right in between the upper second and third on the daily. And if Bitcoin did break out above the 31.8, 32.4 level, that upper second standard deviation on the 2-day is still around that 33,200. So not much has changed at all. So we can take a look at the lower term timeframes, to kind of get an idea of direction here. And it looks like a low would be set in the same area on the daily as it would be, or on the 12 hours, it would be the daily here. So the candle, the Monday candle open for the 12 hours also at around 30,150. So closes above there, in my opinion, would set the 12-hour low. You can see that the 12-hour basis is just below the daily basis here. So we can get an early indication. As you can see, the bands are pretty much in line with each other. This, of course, on the right here, these levels are the daily bands that I just selected, and then we've got the 12-hour bands, and they're basically in line with each other. The downside or bottom half of the bands, or the weak half of the bands on the 12-hour, are a little bit lower because of the amount of closures below the basis and lower first, and then wicking down into that lower second standard deviation, which is beginning to come down to that 20. It's at 29,600. I suspect that it's gonna float around down here if it does close back below the lower first. Thus, if that area was to get closed below on the 12-hour, we would most likely see expansion past the lows of the range at around 29.4 to 5. Which would start to fulfill some of the downside target areas at 28.6, 5 to 6 to 28K. The last Bitcoin in 60 seconds video, I also included the $27,000 area, and I'm flipping through timeframes here, but the reason why is that's 27,200s a daily to that lower first here at 27,500, which is coming in around this wick high area. Now, we had the rejection, and then when this area broke, there was 2 areas to look for on the way up. It was this wick high at 27.5 when Bitcoin was trading down around that $25,000 area, high $24,000 area. And then the next area was that 28K to 28.5 to 6. So these are the same areas that I'm looking at on the way back down. There is an argument for just kind of getting to 28.5 to 6 because there is a daily high put in there and the wick high. But, if Bitcoin starts to get serious expansion to the downside, we have to have those areas underneath there picked out for as areas of potential interest. You can take the low over here, and that's the same area. It's 27.5. We had the wicks here that were wicking off of that low at around 27.5. It's 5 to 6. You have the 27.250 area down here on these lows on the 2-day and daily. So coming in around that lower first, we need to be aware of it, because Bitcoin would need to hold that area, in my opinion, to avoid a further slide down. That's going to be a major area of interest either way, as there is a lot of price action in and around there. It acted as resistance and then acted as support first and then as resistance before Bitcoin kind of mooned through it in just one candle, 1 to 2 candles actually. Took out the 27.5 overhead resistance, 27.5 to 27.5 low. That's 27.6 to 7. Took that out on this candle here, and then ran 28K and almost to that wick. Next candle, it just took out the wick and the high side structures. Pulled back, and now it's just trying to find support in and around these highs. So, there's a lot of people dooming and glooming right now, and I think it's a little early for that, to be quite honest. I haven't seen the opportunity for a lot of good trades. So if you are trading this, I would be careful, because we're not seeing follow through to the downside, and we have only seen kind of fake outs to the upside as well. So to really drive this point home, if Bitcoin is above the lower first on the 12-hour above the lower first and below the upper first, and just kind of hanging around this mid zone around the basis band on the 12-hour, right? There ain't much happening. You might be able to derive some direction from some of the lower term timeframes, but at this point, the 12-hour is ready to turn on Stoke. In fact, it already has. It's only a K over the D read. The D read is not pointed up yet, so this is not a full signal. At the end of today's price action close on the daily, we will see where this is at and if it gets a complete signal. But that's it's getting its first turn. It's in the oversold area, and the 12-hour is pretty clean. Its first turn in the overbought area was going to be, was back here at the start of the range, and now we're on the other side of that while still holding the range. So I did want to point this out, as there is a bit of a trend line regression. If you watch Crown, he's big on these as well, and you can do them on a regular Stoke because it's reading close over close momentum. So you can, draw some meme trend lines and say, like, realistically, outside of these highs here, probably going to break the lows of this, or I'm sorry, the highs of the range, right? Or already be above them when Stoke gets there. And then, there's the downside here. Didn't quite hit all the way to 0, or in this case, it would have been about 9% or a 9 read. But, if it were to break down to this level, it's likely in and around the lows or lower, maybe even hitting that 28.5 area. So this is going to be interesting to watch coming into today's daily close. We might be able to derive some direction on some lower term timeframes as well. So let's go ahead and work our way down the timeframes and see what's happening here. We've got the 8-hour, I imagine, has already turned. Has it confirmed a low on Stoke? It has 29,680 to keep that turn to the upside. And we've got, let's go look at RSI as well. We've got volatility dropping like a rock as well. Let's go look at RSI and see if there's any kind of interesting divergences here. So not that I'm seeing at the moment. We've got lower low RSI and we've got lower low price action. So nothing really interesting. Bouncing off the bearish control zone first pass, pretty standard stuff. Up above the moving average here, so that is a decent look. I would watch the midline around the 50 read. We can actually get that that number. That would be 30,281. And let's compare that to where the bands are. We've got the lower first is at 29.9, and the basis is at 30,366 on the 8 hour. So that's this read here. And that is, that's actually above the 50 read there on RSI. But playing above the lower first, it's got to set the low in here. I mean, it's calling this a low based on this 3-candle swing of the lows right here, because the bull candle closed above the open and the wick high of the second candle. So we've got a 3-candle low. Realistically, it's not even close to being interesting until it gets above basically the 50 read of RSI. It would be the low side structure here of this little consolidation. And that is coming in at 30,248. So there's your 50 read on RSI. That was 30,281. So yeah, looking at this consolidation right here, if it can reclaim the low side, 30,268 to the high side at 30,350, which you want to see it reclaim the basis band at that point. And that's most likely going to be closures on or above that 30,350 to 360 area. And then we evaluate whether or not it can run to that upper first, which on the 8 hour is basically in line with the 12 hour and daily. It's at 30,800. When looking at the 6 hour, we do see compression on the bands now. So the 6 hour is going to be setting up for a move pretty soon. And the Stoke pivot here is going to be 29,800. So that is an area to watch. We are seeing momentum, momentum sitting at the just under the 50 read for the K and the D here. And that is, it's still in a hefty downtrend. Like there's no uptrend here. So this is more likely to be bearish if it does not start making some moves to the upside to take out the last local high, which is going to be the last 6 hour local high is 30,450. And the close was at 30,400 basically. So, we're looking at that 30,500 area to 30,800 areas of first pass bearish retest zone anyway. So you can even lower that criteria if you are on the lower term timeframes and it swings this high and misses and or doesn't even get to it. And you're talking 30,400. If you're going to front run, just be very careful. But that is the bearish retest zone. It keeps showing up everywhere we look. Now, when looking at the 4 hour, 4 hour looks pretty good. I mean, it's continuing to roll up 29,776. This is what you want to see. The lower term time frames you want to see have that lower pivot number than some of these higher term time frames to really start getting an edge to head up. It is in and around the basis band. You can see that the lower second standard deviation expansion to the downside would be past that 29,800 and 900 closing area. And the lower second is at 29,723. So that would be, there's quite a few of these time frames have been pivoted around that 29,800, 29,900. So expansion below the lower second would also be into the daily lower second at around that, that's updated to 29,680. So if we do start seeing the 4 hour get under there, hi Bobby, we would probably see expansion past the low or a swing of the low at the very least at around that 29.5 to 4. I know that there are charts and exchanges where this low did get swung. This 29.4 got swung. It did not get swung on spot price. So I'm referring to spot price action in this case. And back above the basis, which is the lower first on the daily at 30,000, $50 to 30,100. I would expect this to come up and retest around the upper first on the 4 hour. And there you go, 30,250. And we were just looking at the 50 read on the other time frame, and that would need to be recovered to go up and test the highs around 30,400 to 500. Still the bearish retest zone, as that is the basis and the upper second standard deviation on the 4 hour. So we would need to see a little bit of compression and then closes above the 4 hour that beat out the daily above the upper second standard deviation on the 4 hour that also beat out the daily basis band to then get expansion up to the 30,800 area. Otherwise, the downside route and a swing of this low and possible break is a little bit more favorable right now, but it's not a given for sure. Stoke is pointed up, momentum's pointed up. There is likely to be some continuation drives of bearish divergence if this does put in a local high in the 4 hour, but I'm not enamored with a lot of the price action. There's been no follow through to the upside or downside. Let's look at that 3 hour here. 3 hour is above the basis, still very heavily downside angled. $30,000 is the pivot on the 3 hour. The 2 hour, we're looking at, this looks weak, to be quite honest. It looks like it at least wants to test back down to this wick right here, but no guarantees. If it can get above the upper first at $30,055, again, everything's just kind of lining up with this lower first and basis here from the daily. Needs to get above its most recent high on a close, and that is going to be 30,200. That would be closing above the upper second standard deviation and experiencing upside expansion to probably go test these areas up top, which is around the basis band again. So everything's coming up 30,400 to 500. And if we do start seeing things close below, 29,800, eyes on for those lows to get ran. Or take a look at some of the lower term timeframes. There might be a potential setup on the other side. Although I would be looking at momentum, close over close momentum, divergences, and expansion. Obviously, the volatility is going to be the driver behind a lot of that anyway. We're starting to see that, the hourly is trying to turn itself in terms of its basis, headed down. Now it's headed up. I'm not completely inspired by this price action in either direction. So I would honestly be waiting for a confirmation and a retest, and or this either pumps violently to the upside, which will present the opportunity for a scalp back down to see where it finds support, or a violent dump to the downside, and then could potentially present a scalp back up to see where it finds resistance, and then you can get your shorts in. I would not be... this isn't worth screwing around with in this range until it actually starts to either walk its way up or walk its way down, and or has a fast move up or down. That's kind of where I'm at on price action. It's been a long range here. It's just home on the range. Stoke is pointed up in the hourly. There is a little meme trend line to be had here between the highs and lows on Stoke momentum. We're not seeing much. This is a bearish setup to me, at least for another run of the lows. But let's take a look at this. Bullish control zone is 30,240 to 250. So that's come up a lot as well. That's around the 50 read on some of the other time frames. Now the bull critical, I said bullish control zone. If I said bearish control zone, I will get to that. But bullish control zone is 30,240 to 250. We've got the bull critical zone, which is this area right here, which is the 79 to 80 read. That's around 31,250. So if price just blasted off. And then we've got user alert level, which is around $32,000. That's the yellow dotted line there. I'm not seeing too much here that's giving me any bias yet. But if we do see things around the bullish control zone, That will be interesting. Back below the basis, or the basis, or the 50 read here is getting under $30,000, and then the bearish control zone, which, good for at least a first pass bounce, is at 29,645. So that, if we started to see things close down there, that's going to turn some of those higher term time frames. So just be aware of that. And I do suspect that this would, paint a little bit of a spooky ghost pattern, depending on, no, it's too deep. This is too deep to be spooky ghost. But it would turn back down below that 29,840 anyway. So I do think by Friday we will have a better indication of direction. A lot of shorts getting eaten up down here as well. So let's go ahead and take a look at that. And here I have you can use CoinGlass or Coinalyze. Coinalyze, as it was brought to my attention, actually has some different, it has a few more exchanges versus CoinGlass for OI. And I believe that I was looking at the difference between, I think it was Credible Cryptos had posted an OI chart, and I had mentioned hey, that I'm seeing less OI or more OI. It was one of the two. And he hit back and was like, hey, what exchanges is that using? Is it including this or that? And so I went and looked, and we found that this actually has a few more exchanges in it. So, and one of the other exchanges included CME, I believe, and maybe this doesn't. I don't remember. Either way, either one you use is it's gonna give you a decent look at OI, just plus or minus a couple $1 billion, like 500 billion. Either way, you can see that as Bitcoin was running down, it was washing out all of the OI that was built up at the highs here. So when looking at kind of where OI was on its lows here, we can take this area here. It's not snapping. I gotta set that up. Sorry. So we've got kind of on the lows, and then we've got OI on the highs here. Just rough estimations. But what I want to kind of point out to you is that on the move up, we had, so move up. Let's get this set up. I wish there was a way to save it. Maybe you can if you're logged in. On the move up, we saw OI move up with it. So saw OI move up. On the move down, we saw OI get wiped out. So this is closing positions, longs getting stopped out, so on and so forth. Now, when we're on the lows now and headed down, but we see OI headed up again, but it's still headed down, right? This is shorts front running a break of the range low. And you can tell because as soon as price started to rise again, they got initially washed out, especially on the bounce here, and then move up. And then now OI has kind of been downtrending as things have moved up. So this is what this tells me is longs taking profit, getting washed out of the market. There was also shorts taking profit on the way down. As things started to break down, we see OI building up again. That's a combination of longs and shorts, but in this case, because one to two candles wiped out about $1 billion in OI or more, that was shorts trying to short the breakdown. That was late shorts coming in. They get washed out. We go sideways on OI. We go sideways on price action. It's all the same liquidity within the market, just being sloshed from long to short. And the range is being held. So I'm not seeing anything super interesting. Now we are at a higher OI level for this price action currently than we have been in recent memory. So we're trading around this low. And the last time that we were in and around this low we were at like 9.5 billion in OI and currently trading about 10 billion. So about 500 million more in open interest on this consolidation. I would expect this to get wiped before a move. And that doesn't mean that I'm going to be right, but I would expect this to get wiped out. The other thing that I want to make note of is kind of where we've been at this price point. At around $30,000 or so, OI has been very, very low in terms of relative to the prior levels of OI. So it was trading around 10 billion to 10.2 billion above it and on it. And then we see a washout and it gets down to 9.5 billion, a little bit under. We get the moves up and it's kind of capped around that 10.8 billion. So, we're seeing the same liquidity just kind of sloshing around the market. On the spike high, comes back down to 9.5, a little bit under 9.5, so 9.4 billion. And we're kind of capping out on OI at around that 10.8 billion. So this does tell me, though, that because of where Bitcoin is trading relative to where it was prior, it's got higher OI here at a lower price than it's had previously. So I would expect a little bit of a wash, whether it's longs. If it does wash longs out and breaks the lows, we're going to see the price run the other way, meaning it's going to run down. And if it does wash out shorts and then run down, if OI's relationship with price lately has been pretty interesting. This is the only real divergence I've seen. It's just been OI going up on the highs, wash it out, OI going up. Usually price has been going up with it, and now it's the opposite. So I would say spikes up are probably going to bring OI down. That's what I would be watching for. So I hope that helps you out a little bit, just because of where it's the level of OI in relationship to where price currently is. So it seems a little high to me. And that's probably a combination of shorts and longs getting excited. But can we get a bias on that? There's tools that can help you with it. I believe there's short and long data here, but I don't trust it. I think CoinGlass does short and long ratio, but there's a few other places. You can even go, I believe MDX has one for Binance, and he has a short long ratio chart at MDX Crypto. Let me do MDX. Yeah, I believe he's got on his app. Oh, geez, I don't know what are we doing. He's got all kinds of stuff. He's changed it up quite a bit. I'm not in his dashboard anymore, so I guess I don't know if it's paywalled or what it is, but I believe he had a long short calculator, which is just from Binance. You can go to CoinGlass, you can do all that kind of stuff. But right now, I would wait to see how things react in the 30,200 to 250 area, 30,300. That's that weekly as well. So keep an eye on the weekly. When looking at 30,300, that's this. What am I looking for? The weekly level at 30,300. It's going to be this high right here. What am I missing here? What's going on? My brain just broke. I'm sorry, guys. Hold on. I know that there's a weekly here at 30,300. Yeah, it is this one. I don't know why my brain was not registering the high. But 30,300, it's a major area. Keep an eye on it. 30,500, 30,800. And then, like I said earlier, 29.8 and under. Just keep an eye on those lows. And kind of go from there. Traditional markets are looking fine. They're hanging around the highs and higher. I spoke about this on Monday, and seeing the expansion and BBWP most likely going to head up. And we are heading up to the areas that I talked about, in and around these highs on Dow. If it does get above here, we can go and start investigating if it's going to actually run the highs and higher. It's good on momentum. Looks good. Pointed up. Green DMI, ADX, all that. ADX is strengthening with this move as well, of course. The 2-day looking good. 3-day momentum looks fine. Yeah, man, this is, and the 3-day just opened as well. So this is going to keep pushing, I think. I do think it's getting close to at least putting in a local high, but it still has the expansion rolling to the upside here. It looks good for further upside. It's significant. A significant change is going to happen if it can close the weekly, especially above this lower high area. And then if it reclaims this high on the weekly, and this high is coming in with an open at 35,108. If it can close the on Friday above that area, I'm sorry, man. Like, this thing, it's got one more high to get through before the actual highs, and that would be an open at 35,490. So yeah, it's about 300 points higher, but it's within striking distance on Dow, and it's going to put a little bit of a wrench in a lot of these macro analysts' plans, right? I wonder what their story is going to be. If only they actually traded charts, then they would probably be singing a bit of a different tune. NASDAQ looks freaking vertical. Look, man, this is the party's going to end at some point on this move across traditional market land, at least in the short term. And it'll be brilliant too, because when it does, all the macro guys, all the macro doomers for the markets, not the economy, we're talking markets now. All the macro doomers for markets are going to get real like, see, it's going to double top here and it's going to nuke out past the lows and yada, yada, yada. That's what you're going to see. So, I mean, NASDAQ on the weekly is ahead of where I just pointed out on Dow. So let's go ahead and actually do this. Let's do this. So let's point out the next big areas. For Dow, it's going to be this high structure right here. So it's got a little ways to go, but if it can close above this high, where it's kind of working its way into it around that 35,100 area, if it can close above there on the weekly, I would be looking for this to. We can see that the Bollinger Bands are giving it away. I mean, this move right up to that high was already kind of showing itself on the closure above the upper first. That becomes an available target at the upper second. It's right at that weekly open. It's now trading there. So if we do see a close above here again, upper second's going to expand pretty aggressively. I mean, this is coming off a 13 read, and it's already confirmed up over the. Man, this looks like it wants to go. I'm thinking. Hold on, sorry. My brain is processing. Yes, this looks like it wants to go, man. It's a breakout. It's a legit breakout. It's just got to close above these wicks. So that's the other side of this. If it does get reclaim, a bearish reclaim by the end of the week at this high at 34,712, that would not be the best look. That does mean that this would probably be a reversal, at least in the lower term timeframes, and then we come back to it later. Now, that would be, everything's good for this move above the upper first at around 34,381. That does mean that when looking at, man, this is, what a parabolic move, huh? It's kind of ridiculous. You know, they make fun of Bitcoin and altcoins, a lot of traditional market guys, and then here you go and you look at traditional markets and it's like trading a shit coin. And then you look at individual stocks within the traditional markets, and they're worse than shitcoins. So, 15,850, and that the close open structure being at around 15,700 above there in the weekly. Nasdaq looks as if it's going to run the highs and possibly higher. SPY on the other hand, I think is on the other hand. I don't know why I said that, but SPY is doing roughly the same thing. The area to beat out right now is just this. It's already there. It's now the wick high. So 452. What did I say? What did I say Monday? It was like 452 to 458 or something was the next big area to the upside, and that's been hit. I already moved the line, so I can't flip back to the daily and take a look. But closing on the weekly here or higher does make the wick high over here at 462 available. And I would be looking for this to run the actual highs. Now, I want to bring up something pretty important that we should pay attention to. And that is, what about the monthly? And this is where things get interesting, very, very interesting to me. So we can flip back to the Dow chart here. Now, Dow closing above, because this is just a consolidation for Dow. It's a little bit different of a different look on NASDAQ and SPY. And in this case, the Bollinger Band's flattened. So this is a big consolidation area. Now it ran the lower second and third on that real deep rundown, and now it's up against the upper first. So if it was going to fail, this is where it's going to fail and maintain a monthly downtrend. What is the likelihood of that happening? Well, we can look at momentum, and momentum is still up. DMI is red though, and we can see that the advanced decline, or ADX, is down on this move up. So from a monthly standpoint, this is mean reversion on the monthly, and it's mean reversion from the lows back to retest the overhead resistance at the highs. Now, if it does break and close above the upper first, that would be an encouraging thing for the bulls. Now that would be above 35K basically. So above 35,000 on Dow, I would be looking for this to run the highs up to the upper second standard deviation. But again, the upper second standard deviation is going to be either a reversal or continuation area. If it can close above there, which is at 36,630 right now, that would be above the close, the highs. No, it's not above the highs. I'm lying. So that would not be above the highs. It would need to close above the upper second standard deviation and the wick high. So upper second standard deviation is coming in at 36,630 or so. And the actual wick high is coming in at 36,952. So about 350 points higher, or 300 points higher, we'll call it. It's 325. It would need to close above there and not swing fail that area. That's going to be the real test. So if we do see traditional markets, Dow's a good indicator of this, because I believe when we look at NASDAQ and we look at SPY, I'm going to say it now and then we'll go check, but I think DMI is green on those on the monthly. But we can see that is the area that needs to be beat once the highs are beat, and then this thing's going to go on a run again, which kind of matches the M2 that I looked at, and a few other things in relation to bonds and liquidity flows and stuff like that in the last live stream. So keep an eye on that. Let's go ahead and look at NASDAQ on the monthly. And my suspicion was correct. Green DMI on NASDAQ. Let's look at the bands. This is a bearish setup, but we've already seen break and a close above the upper first standard deviation on the monthly, and that was at 14,770, or it's at 14,770 now. It was a little bit higher when it actually got the close in last month's candle. It's now above some pretty macro resistance, and it's testing into this open at 14,731. 14,731. Close is what I meant. 15,850. What am I talking about, man? So it's testing the open of October of 2021. And then where's the upper second standard deviation? Well, it's at 16,350, which is the open structure is at 16, basically 16,4, 16,395 there. So SPY needs to close above there. Needs to close above the close open up here, which it was a gap up on the open, so needs to close above 16.4 to the wick high here at 16,764. So that would be a significant candle above the upper second standard deviation, and that's where we would look for continuation. But I can tell you right now, this is set up for a first pass rejection, and that's what we would likely see on the dailies, maybe even the weeklies heading into this. So be aware of that. It's going to be about where the monthlies close from here on out. And I would be looking at Dow for strength if it can not, because the bearish scenario is it's a very bearish scenario set up for a double top on Dow, but that does not mean it's going to play out like that. And it's so obvious to me that this is not technical analysis, but it's so obvious to me on Dow that you're going to get everyone, if this thing runs the highs, that it's going to double top. It's going to double top. It's going to deviate higher and then double top. That's such an obvious scenario that I wonder if it would happen. That's not technical analysis. That's just opinion, but I wonder if it would really happen. The setup is there for it, but what I would like to see, if we do see closures on Dow above the upper first, I want to see, you can already see the etchings of it. The upper second is moving up because the run up and the mean reversion back to, the highs from January 2020, that move back to that high area and that little bit of a lower high before blast off in September of 2020. Well, we're seeing, right? Yeah, September of 2020, and we had the January 2020. Yeah. So that was the high and then lower high. By the way, everyone that I remember this very clearly. Everyone in traditional markets was like, lower high right here. When we went September into October, it was just all of the macro analysis guys, lower high, things are going to dump. We're going to zero. And then this candle wiped them all out. And I mentioned that we got a reversal off the lower, to friends of mine in the business. I'd mentioned we have a reversal off the lower second and third, and we wicked way below on the monthly. And this is, coming in at the close was like right on the basis span of the monthly. I was like, there's a high probability that we're going to see this high retested at the very least, and take out all those put options. So, and that's what happened. And then freaking marched, man. So this is a good setup for a mean reversion play to the downside from that, from the highs that were put in 2020. Mean reversion, and then pop back up. And then if it can get above the upper second standard deviation and get expansion to the upside, the Dow's going to run. But just be aware that you're going to see a lot of double top talk, and there is a basis for it. But when looking at something like NASDAQ, this is set up for a first pass rejection on lower term timeframes based on the monthly. You're going to hear a lot of double top talk there. And the same thing is going on SPY here. So you can see the upper second standard deviation coming in a little bit lower than the close open highs and significantly lower than the wick highs. When you're looking at like the actual numbers, it's 480. It's sitting at, oh no, it's actually not significant. This is actually, I'm a liar. The open's at 476 and the upper second is at 472. I don't know why. It's just the way that the slope of the bands is goofing with my eyes. Maybe, basically. I'm just going to say random words and see which ones pop out in order. But yeah, 480, you're going to hear a lot of swing of the high, double top talk. And quite honestly, even if we did see it double top initially, back to the basis band on any of these is perfectly fine on the monthly. It's going to be brutal on lower term timeframes, but above 415, things are fine, and especially above the upper first on any monthly, like here on SPY. Any closures above 443 and wherever this updates to, probably around 445, 450, are going to look perfect for further upside if it does reject in those areas and or here, where we are digging into this overhead resistance. Traditional markets look fine to me. I will alert you guys if I see anything that's looking a little out there and suspect, but it still looks pretty good. And let's just check for the last part here before I get into requests. Yeah, we are seeing the dollar try to move its way back up this week. Put in a little bit of a low and try to become a deviation of this. Quite honestly, what looks like a distribution structure. The only way that I would see this, you're going to see a lot of people saying, well, if this low's regained, then, this was a deviation and all that. It could still come all the way up for me personally to the daily basis band area and this low over here at 101 to 101.90 to 102, and then still reject and take everything out to the downside. And of course, bearish retest of these lows and then further downside. Weekly is, just it's bouncing in an expansion area, and, it could even dig into the weekly lows here around the lower first standard deviation at 101.33. Give it that slush to 102 on the daily, and it's fine. That's a typical rejection area all the way up to this lower high here on the weekly. So the actual close open structure here being at 102.86. Above there, it's got some room to go test higher, but it's not really until these wicks are taken out around this candle open at 103.50 and above that I would be looking for Dixie to, really make any noise to the upside. We are seeing expansion to the downside on the weekly. 101.70 is it's headed down. 106.60 on the monthly, and then that quarterly is ready to turn, and has already gotten its initial turn at 110.80. So this is telling me from the quarterly perspective, 98.25 or so at the basis band is likely, and that's your daily lower third area around $98. So it can dip under there. And I would say longer term, there's probably going to bounce here and there, but not seeing anything that I like here. Yeah, longer term, just have to go to the quarterly, I guess. The close opens in this area at that lower high before this double bottom on the quarterly between, I would say roughly 96 to 99 is probably going to be an area that we see things settle in. And, as long as it's above 98.75, it's probably not even going to dig into those areas. So we'll go ahead and mark that for future reference. We'll say 98.69, nice, to around, we'll take this bottom because it takes in the consolidation areas here, but we'll take this low as well, all the way down to like 94. It might be a zone that things bounce around in if it can break below that $98 area. I would say 98.69 is a good number. Just use that for right now, and then we'll come back to it later. But things are downside angled on the quarterly. Doesn't look great for Dixie. Now I will get into some requests. If you guys have any, I had some requests come in before I even started the stream. but I'll give you guys a moment to catch up and put your requests in the chats, the various chats for me. And I will take a look here in just a moment. So let me actually get some music back up while I let you guys catch up. We're going to go. There we go. I don't know what this music is, but it's from Streamlabs Music. Enjoy for a moment. Okay, so I see XRP. I had a request for Link. What else? Litecoin. Yep, I'll check on Litecoin. This is coming from guys who can't log into YouTube because of their work. Link, Litecoin, XRP from Bobby. So let's go ahead and for you guys that are not in the YouTube chat, I'm going to check on Bobby's real quick. He was a little quicker. And then I'll get to some of the ones that were requested prior to my stream. The 10-second chart looks like a downtrend on XRP, Bobby. Sorry to say. But let's actually go a little bit higher time frame and check on the what everybody's calling the FUD coin now, because Bitcoin is being lambasted for its by the ESGers currently. So let's go ahead and look at the banker's coin, as everybody likes to call it. You know, it looks strong. It is running the upper second again, and it's 100 over 100 on BBWP. So I would be cognizant of reversals. You're not going to see continuation until it beats out the local, well, this high that it put in at 93 cents or so. So it's got to set up a range. I would take, you know, the wick low at 67 cents to 93 cents. It's a big range. And I would be cognizant of this range. So above the upper first, it looks fine at 72 cents. And I'm not... See, on a big move like this, it's really about holding the last low. Otherwise, it's retrace city, baby. We're looking at like a retrace back to the basis here at 57 to 60 cents or so. I mean, that's just from looking at the daily. That's my first take. So it's got to close above the upper second to go and even test the highs, right? And the upper second is at 85.77. That is what you want to see on the daily close to go test that area. To the downside, you don't want to see things closing back below the upper first standard deviation, as that's going to be a good indication that it's going to test the close open low of this particular move. If it does, now on the other side of that, the close open low is coming in at 71.45. So today's candle could set a low, and it would be a closing higher high, which would indicate to me that it is going to test in and around the highs from the daily perspective. So that is my take from just looking at the daily. And let me jump over into chat and see what your ideas are real quick. So what are you saying? Full degen mode now, entry at 76 and 78. Okay, well, you're in profit, so make sure you're paying yourself if you have your levels picked out, at least to cover your position. Basically today's daily open, good. I mean, you're in a good position. 1 to 4 hour. Okay, so I think based on what I just said, might already be giving you the indication of my bias on those time frames anyway. As today's daily close, if it closes here or higher, it's going to be above the close open structure on the daily already. So, and it would set this as a low, which would indicate to me that this is going to get further upside to the highs. And, you know, as long as it's not failing here at the upper second standard deviation, wherever this updates to after close, which I suspect is going to be, you know, probably, we're probably looking at like 85 to 90 cents. That's just looking at the daily. So let's go look at the, okay. So you're seeing a bull flag breakout is what you were saying. And yes, if it closes above 82 cents, but realistically, it's still got to get above the local high wick on the 4 hour here. This is very high volatility right now at 92 over 87. Stoke is at, well, this particular Stoke isn't showing me. Does this have decimal places? It does. So let's go ahead and do like 5 decimal places. 82,179. Where is that on the bands here? 82,179. So on the bands for the 4 hour, we're looking at any closures back below the upper second standard deviation, and this thing's going to come back. It's going to be a Stoke turn, and it would be getting below the upper second standard deviation. So that is going to be something to watch for. It is currently sweeping this high over here, this little lower high below that wick high of the range that we have defined here. Let's pull a fib real quick and see where things are in this particular range. It's above the 618. Closes above the 618, and I would extend targets up to the 786 around 87.7 to 88 cents. And then you can see the 888, the famous Torx 888 up here at 90 cents. So this fits with the daily. It's really going to depend on this daily closing above this structure over here, and you're going to see that in the 4 hour. And back below the 50 percent or your 0.5 fib would be back below, of course, closing below the upper second even, and closing in and around the upper first. So you want to see the upper first standard deviation hold at around 79.11, 79.10 through close today, and you want to see this close above the upper second standard deviation to get another pop up, in my opinion. Now 4 hours looking pretty stretched. I imagine the hourly's pretty overheated. No, actually, it got a nice little consolidation bounce off the basis. Ooh, pretty. That is pretty, man. This is what you want to see. This is lovely. I like these are great plays. So you get the reversal, get the downtrend reversal, probably bullish divergence building on the hourly. We can always look at it, but I don't think it's worth it right now, as this has already been fulfilled. So what I'm looking for here is this was a nice move right back, and then holds the basis all the way up. It rides that basis upper first and the upper second all the way up, comes back and finds and reverses off of that beautiful low put in here off the basis band on the 4 hour, got the little pinch, and then re-expansion to the upside. I would be careful. You can see that this is overextended on the hourly right now, so just take it little by little. Make sure you're paying yourself for your position, right? Closures above the upper second and third area are starting to wick into the upper second on the daily. Right? This is still the daily, correct? Yes, it is. Of the, so you want to start seeing this close above that upper second standard deviation on the daily to go run the actual highs of this particular range. Looks good. To the downside here on the hourly, you don't want to see it getting past this this last low. It's at the 382 at 77.33. Otherwise, this thing's going to run right back down into the lower 70-cent range at around 75 and under, down to like that 69 nice to 70 cents. So just be aware of that. You don't want to see it take out this last 382 from the hourly perspective. Now, when looking at closes, that would also violate a lot of the stuff on the 4 hour, thus pushing things down. And I suspect if we were to go and look at something like a 12 hour, this is where you're getting your extra room to the upside. Being above, oh, this is pretty. Let's get rid of the fib. The upper second standard deviation is lining up with a possible swing of the highs. This will keep going up on closures above the upper first. And this is in a bit of a mean reversion look. We have BWP under the moving average right now. I don't think this thing is going to break out to new highs, but it very well may run the highs. Then again, I look at Stoke and it's 74.27. I mean, this thing could scream to the upside a little bit more, but I think, am I being too cautious? It's tough to tell. Yeah, this is showing me mean reversion. So we're seeing residual expansion on the 12 hour. What this does tell me is that this is going to be the time frame to watch. The 12 hour is going to be the time frame to watch, as it's probably going to provide a nice little cap on price for a little bit. The basis band being the low side of the range for the 12 hour. You just don't want to see it closing below there. Same for the daily, obviously taking out the last lows. Right now, that's it's going to update and most likely be within range of this consolidation structure. Again, closes above the highs for the 12 hour are going to give it the ability to actually run the highs up here around the wick high at that 93 to 94 cent area. So we could, one scenario that I would be aware of is, even though we see the 12 hour in mean reversion mode, we could still see it run the highs and then deviate. So that's what I would actually be looking for from the way that this is looking at the moment. All right, so there's XRP. Is that good? You want any? Is there any other info that you want me to look at regarding that? Give you a second, and then I'm going to move on to Link and then Litecoin. So we got. I'm just going to call you Keb because I can't really read their username from here. I see the Indians logo. I agree with the S&P 500 double top scenario. Liquidity will build above for a swing failure in December to January. I should send you my chart pattern on Twitter. I'll chat later. Sure, yeah. I mean, that's going to be the narrative, but what I'll tell you is, like I said when I was going over those, if they hold the basis on any kind of move down, they do look like they want to move. S&P, NASDAQ, Dow do look like they want to move to the actual highs and swing them. But what you're going to get is a lot of like doomers. We're going to take out the last low. And I don't know if that's going to be, I don't know how realistic that is. Like, that's too far ahead, because the basis band will move up. And if they close above the upper first, even swinging the local highs, first pass rejection is always, that is like the name of the game. That's what you're looking for, is first pass rejections, and then evaluate later. So yeah, I agree with your double top scenario, but I don't agree with it meaning like it might double top for short term, but from my perspective, I'm not looking for it to like nuke the last low. I could be wrong. I have been wrong before. Bobby says, thank you very much, confirming your exact analysis. Good. I'm glad I could provide you with some confirmation bias. All right, so it was Link. Link is the next one. Stinky Linky ran right to our zone. Look at that. Isn't it beautiful? Oh, it even hit the downside area that I was talking about, huh? But it stayed in the zone. This, I'll be honest, if this takes out 662 or the basis, this is a double top. We're talking about double tops today. Look at it's an M for market maker pattern. Realistically, I mean, this was the area that we were looking. I had mentioned this was a couple streams ago now. I believe Baba had asked me about this, and this is, you know, the area that I was expecting major resistances in, and that is what we are seeing. So as long as this is above the basis at 654, it's fine. You want to see a consolidation right where it's consolidating and closing. You know, it's held it on a close yesterday. You know, and then open is right at that, you know, 690. Looks like at very least it wants to test up from just the daily perspective. Looks like it wants to test the upper second standard deviation around these wick highs again. Closures above 727 to 729. You can just call it 730 if you want to be safe, and I would be looking for this to move up to 750. Closes below 690, and I would be looking for it to test it back down to 662 to 653 at the basis, and just be aware of that. 4 hour, you know, just a nice pop up and then mean reversion back to test this high. That's textbook. What you would have wanted to see initially is for this thing to get above this high and close above it. It did not. Closed on a lower high, so this is a consolidation until proven otherwise. So you are seeing a bit of a reversal set up off the basis band here. This is very nice. This is what you want to see. Now you want to see this confirm at close above these wick highs. So at 702.97026, basically at 703. You want to see closures above there, above the upper first standard deviation of the 4 hour, to have this thing go and test the upper second standard deviation and start trying to get above here. But until that would be higher lows within this range, a little bit of a double bottom here on the 4 hour. So I'd be looking for it to test further up, and we just got that close. So that is, yeah, 704 now above the upper second standard deviation. This close came in just now at 702.9. The wick high was at 702.92. This was at 702.90. So just below that wick low. It's tough to tell because I've got garbage on the screen and my eyes aren't great. But there is a bit of an order block stall out here. So this area is going to be big. Where this high was put in. It's not really a high, it's still a downtrend. I mean, you will have a GAN swing indicator may even call that a high, a little low to a lower high. So higher low to lower high, lower low, lower high. That would still be a lower low, but not on the wick. Lower high, lower low. That would be an order block area, so it is pushing up to that area at around 714 to that's 707 to 714 is that order block area. So I would actually highlight that and watch it coming into close today and into tomorrow. So I would highlight this area and we'll make it blue so that's text. I don't know why I did text. That's fill. There we go. So a little bit of a blue fill zone for that order block, just to make it a little bit more visible, and it's right in between some pretty important areas. So this looks like consolidation. Stoke is kind of pointed up. 706 is the pivot there. What's the hourly looking like? Hourly's up. You don't want to see failures at this upper second on the hourly. You want to see expansion. Otherwise, this thing's going to consolidate longer. But again, like at the beginning, 662 is the big area down to 653 on the daily. And then you're really looking for 727 to 730 to the upside to break on link. And I got a thank you. That's the same levels and stuff that we talked about prior. Got some good trades in. When are you going to stop by the shop again? It's going to be a little while, dude. Got a lot of stuff to do. But I will call you guys later today, as I do have some stuff that I want you to take care of. Bobby says, confirming, I learned from you. So hopefully after a few years, I picked up a thing or two. Yes. Oh, well, I'm glad, buddy. Litecoin was the other one that I had a request for. This was from... I'm just going to label you guys as, because it's getting confusing when you message me individually. Can you guys that aren't in the YouTube chat, that can't log in from work, I'm going to change your group name. Just change it to prop. Because then I know you're from the shop over there. Yeah. Okay, thank you. Yeah, because it just makes it easier, because I've got a few different chats open with some of you. And then the main one is where I want you guys to put what you'd like to see. So Litecoin, Litecoin came back down to the lower first standard deviation on the daily. And I had mentioned just as long as it's above this last low and starts to reverse, it's fine. And that's down in the 80. This close open was at 83 bucks, right? Yeah, 83.01, almost, yeah, 83 bucks even, basically. That, of course, because you want to see reversals off the lower second at worst, and Litecoin was looking like it wanted to continue down. It needed to get above 101.04 and hold it on the daily, and it did not. It did close above it, but it came up to the areas I talked about, which was the low side of the actual high that was put in. We do see that Stoke is setting up for a turn if it can hold that lower first to lower second area. Stoke at 93.73, and that's, it's 92.87. I hate this thing on. Let me change the music real quick, because this particular song in the background like hurts my ears for some reason. Might be a great song, but this Streamlabs thing got that song. I'm not a big fan of this one here. Yeah, let's see, we'll do Alien Gaze. That's Gaze, by the way. I don't want to get canceled. That's the name of the song, by the way. All right, so regaining the lower first on Litecoin, gonna look good. So above 93 bucks, this is gonna start to get a Stoke turn, be back above the lower first. This is where you want to see an uptrend bounce off of at worst in most cases. Otherwise, you want to see it reverse off the lower second, which is now above that last low. So things are good to even test down further into like 86. I would say, well, this is $87 almost. So I would give, this is going to move up. You see that the bands are compressing again because, low volatility and whatnot. This is still headed down. So I would say you don't want to see anything below the last wick lows, and that's going to be at 89.36, because closures below there are going to be probably right where the lower second standard deviation would be, and you don't want to see closures below the lower second standard deviation. Again, it's still good below this low, but that would just be a bad look. as it would be getting re-expansion to the downside to go test that low and possibly lower. So looks good. You only wanted a daily on this. Let's look at the weekly. We'll do a little bit of higher term time frame. So back at the basis on the weekly, we talked about this. That's lower first on the daily. Looks fine. Now back above the upper first is being above the basis on the daily. That would give me the look that this is ready to march higher and test the highs again. So that's 90 bucks at the lower first, right? The basis is at 89.76. That's what just got wicked. Back above 98.25 would be the basis on the daily. Upper first on the weekly, that would be very strong. So that would be your strong closures to go and test in and around 100 bucks to 105 bucks again up here at the upper first on the daily, upper second on the weekly. So it looks good. Looks good, man. Now this could turn very bad. You see the basis start falling apart. It's going to start impulsing down to, from the weekly perspective, in my opinion, that'd be, you know, from the daily, you'd see impulses down to like the low 80s. And that's not what you want to see. It's testing that low area that you don't want to see tested. And when I say impulse, I am talking about lower term time frame impulses down. So looks good though. All the Wyckoff guys and the Elliott wave guys hate when I bring up impulse. Like that's not how they use that word. I saw one of you guys over there. I saw you bitching about it. You guys are hearing me before the YouTube guys. Yes. Well, because I'm sending you guys a separate stream. Yeah. You got basically direct feed. You're welcome. All right. So that was Litecoin. We took a look at Link and XRP. Is there any other meme coins or any kind of coins you want me to look at before I head out? We'll wrap this up here shortly. We're almost at the 2-hour mark. So anybody in YouTube lands, it's quiet over there today. I'm seeing emojis pop up every once in a while. So you guys found the emojis, I see. I'll let you guys catch up over on YouTube. And we'll flip to the Litecoin 10-second chart. See if it's mooning or dooming. Well, I let you guys catch up. If there's any coins that I guess I don't want to look at Bitstamp, huh? Stupidly low liquidity. Oh god, Binance doesn't look much better on the 10-second chart, but it's better than, I mean, I guess Litecoin isn't really traded a lot here. JR, hello, sir. He says Pepe. Let's go ahead and look at it. Let's see. Let's look at JR's Pepe. Not PepsiCo. I have seen a lot more. Do you have any preference for exchange? So I can only see a K, but I see that Chem says hands have been full. Do you have an exchange that you'd like? Oh, you know what? I hope don't type. I'm gonna pick one. I'm gonna go to Binance because I have the feeling you might be driving and listening. Let's go to, or wait. It's on Binance, right? But that's not the longest chart. Is it? That's spot. You want USDT. It's the top one, and I'm just not. Right? Hold on, let me struggle a little bit more and ask random questions. So the other one, am I just missing it? There's a perp chart, right? Because this is spot. let's just check this one for now. I want to get a good feel for where it's at. Oh, you know, you know what we're gonna need JR for the levels, the selectable levels, reference time frame levels for the indicator. We're gonna need a unless I'm missing it, we're gonna need a way to configure decimal points because it's not showing on there. Yeah, I gotta manually type it. Oh, I wonder why it wasn't coming up. That's Bitcoin. No, yeah, it's not showing up for Binance. I'm not seeing it on Binance, but for the perpetual. But yeah, we need decimals. 'Cause that's Pepe is saying no to decimal points on that particular indicator, but that's okay. It's just something that I went to go and look, and unless I'm missing it, there's no decimals. That's okay. Holding the lower first on the daily is good for Pepe right now. But we need more decimal places for Pepe. Oh, 1,000. Oh, because because I need more decimal places for Pepe. Below whatever the hell 0.000016 16566, this is going to keep heading down on momentum, but it's in and around the lower first. If it can get back above the basis band, which is at, we'll call it 160, these fractions of a penny here. So let's actually see, because that might be dollar denominated, because its spot is trading in the minuscule amounts of pennies here, below a penny. Okay, there it is. Yeah, 1,000 Pepes to get you to still roughly the same. It's a little bit more palatable. 0.0016 cents, 16.5 needs to turn momentum back to the upside, but this is normal in the area that it's trying to bottom in, around the lower first. So it needs to hold 15.15 or 115, and it needs to regain the basis at 159 or 16. You know, the daily looks like a consolidation. I'm not getting like a good read on it from that perspective. It's still in it. Even BBWP is showing consolidation, a consolidation look. I mean, it just hasn't been listed long. It could get bullish divergence, right? Let's look. Yeah, so it's set up for a possible continuation drive of bullish divergence if it does set a 3-candle low here. So I would say back above the basis band on the daily, and you're probably going to see that bull div beginning to develop and confirm. And I'd be looking to 168 or so, and then possibly to 175. Could move quick if it's looking okay. Yeah, it's winding up on the 4 hours, so the next move is going to be a bigger one. Stoke is pointed up above 1541. It needs to get above 1566 at the upper first in order to go and really have a chance to test the basis on the daily to set a 3-candle low. So I might have to delete and re-add the indicator from the actual chart Maybe that'll fix it if you've already pushed that update. Let's see. I'll go look and see if it has a decimal point update. Nope, not in this one. That's okay. I can always jump in there and take a look too. But yeah, it's setting up for a move pretty soon here. From the 4 hour perspective, you really want to see it getting above the upper first on the 4 hour to start setting a 3 candle low on the daily. That would thus give it the possibility for a potential bullish, hidden bullish divergence on the daily. So just keep that in mind. And then it just can't take out this last 4 hour low, which is coming in at, on the close, it's coming in at 15049. So I would just, you don't want to see it take out this low, because that would be below the lower second. That would imply downside to the actual lows and maybe lower. Although this thing can move because it's fractions of a cent. It could probably move pretty quick. So bear that in mind when you're looking at this. Let's turn this to the daily. Yeah, that would also be below the lower first on the daily. Likely to go and test around the lower second, which is in the 142, 143 area, which is around the actual lows of this consolidation range. So that would be what I'm watching, is the last 4 hour low at 15049. And it needs to get above, for the daily close, 156 at least, and then take out this wick high. I would just say this last wick high, because it's above the opens, or it's right at the close opens of this little consolidation move down. So 15756, and then you're looking at this probably topping out around the wicks and then come back to it later. But at least it could get that daily bull div on a 3 candle structure. I don't think that's going to happen today, because this is the second candle, and you'd want to see tomorrow move up and then start digging into that basis band on the daily. Otherwise, I think that it's pressure down still, but holding that lower first is fine. Breaking below it on the daily is going to see it move down to the lower second area at 142. In fact, so that lines up on the daily lower second as well. Yeah, looks good for those moves I just talked about, at least. Yeah. So, any other ones? Otherwise, I'm going to take off. I'm going to let some of you guys catch up. I see you guys over there. Tell Joey over there that I will call him later. Yes. Yes. We're going to talk bonds. I want to roll. We want to do rolls. 1 month, 3 months, 6 month, 9 month, and yearly. So... yeah. All right. I'm going to call Joey later. Yeah. We want to roll those. We want to roll them. Yes, sir. You see the interest rates. Just to give you guys an idea. So there's some guys that work in a prop shop that I'm talking to over here. They're getting a direct feed of the stream. They can't post to YouTube, but they are reading your guys' stuff as well. So I'm sorry for those of you that are in various chats with me. That's who I'm talking to when I'm referencing some of that stuff. When you're looking at the 1 month bonds, they're being bought up at an incredible rate, which is pushing. This is your 1 month versus your yield for the USO 1 month. We'll just take a look at the yield. So it's rocket shipping, right, for the monthly, but on the daily, if this consolidation doesn't push the highs again we're likely going to see things move down to 4.76. So just be aware of that, because this could become a reversal zone right here on the 1 month. You can see Stochas is pointed down. It's consolidating in the reversal zone, so it's either going to break out to the upside or it's going to tank. So that's what I'm referring to. Tell Joey that I'll call him later and talk to him about it. I'm seeing a roll, so we're probably going to want to roll for next quarter. Yeah, this is a good time to roll, and then next quarter, if it does push higher, then we can roll into that and roll out of the other ones. Cool. All right, take care. All right, guys. I see a thumbs up. No other requests. I'm gonna get rolling out of here then myself. Speaking of rolling, and go eat some lunch. And if you guys have any questions, comments, or anything you want to suggest to me, please leave it in the comment section after the video is posted. I apologize that I did not have a Bitcoin in 60 seconds video yesterday. Had some personal stuff going on, and then ended up hanging with family shortly after. So I will have one later today, and I would like your input on what good streaming times would be, and I'll start putting together a schedule. Just checking on gold while I'm talking to you real quick. Yeah, gold looking all right. Consolidation on the highs here. For the 4 hour, what's the hour? Yeah, this might turn into a deviation and then back down, and then we see where it holds. Gold at 1931 is what you want to see hold. 1931 and 1940. So structurally, you prefer to see it above this last high. This was the last lower high prior to the consolidation on the lows. Nice little 3-dip consolidation, head and shoulders, whatnot. This was at the close was 1960. That's your preferred zone to hold. That's also above the upper first standard deviation. Likely, this next tick is going to see this in and around the current little high, this little higher high that was put in, the trend break high. So you want to see it, yeah, you want to see it hold above about 1960 and then go from there. All right, you guys, suggestions for times, what works for you guys, and then hit me up on, you can always, if you're on Twitter and you message me, if I don't message you back, let me know that you DM'd me, because it's a freaking mess in there. I'm getting DMs from all the scammers all over the place, so everything's just going right into that. They introduced a feature to like weed that stuff out, and you might get caught up in it. So if you sent me a DM and I didn't see it, just tweet at me, or in a reply to one of my tweets or something like, hey, I DM'd you, can you take a look? And I will take a look. All right, you guys have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. And with all of that being said, I really appreciate you guys hanging out with me, and I will get back at you again soon. Landy out.